How's it going, everyone? Hope you're having an awesome day. So today I want to talk a little bit about yesterday's Bitcoin news. I'm sure you've all heard by now that there was an untrue report released yesterday about a BlackRock's Bitcoin ETF being approved, and it was not correct. It wasn't fact checked, which really sucks. I mean, we have to be a little bit more diligent there. That's a really big, a really big piece of the news to drop on people when it's false. All right. But before we get into that, I just want to ask you guys, please hit the like button, subscribe to my channel, follow me on X, and let's get into our video. So the purpose of this video is just to talk about, obviously, people are sitting on the sidelines with money and they're waiting. They're obviously waiting for this to be approved. I mean, the influx of money that came in yesterday was incredible. The volume moved the price, quite substantially yesterday. And after everybody kind of figured out that the news wasn't correct, things started kind of dropping back down again. But that just proves that this is going to make a huge impact once this does get approved. Well, let's get into what we got here on our article. So Bitcoin's price held on to momentum first seen yesterday after a false report about the supposed approval of a spot ETF, and it had crypto markets buzzing. So on Monday, a false report inaccurately asserted that BlackRock's proposed spot Bitcoin ETF had gained approval, causing a surge in trading activity and volatility. While Bitcoin paired gains after the report was debunked, it still ended the day higher than where it had started. That's good, though. Market activity ignited by the false report we can look at it as a dress rehearsal to what would happen if a spot Bitcoin ETF was actually approved. So BlackRock sees flight to quality. So BlackRock CEO Larry Fink, in an interview with the Fox Business on Monday, he suggested the market reaction to the false report revealed the pent-up interest in crypto. So he believes that Larry Fink. I mean, these guys aren't stupid. They know what they're doing. Makes you wonder sometimes, if things like this are leaked, just to see what's going to happen, right? Crypto's full of market manipulation. So is the stock market. I mean, that's no shocker, right? So according to Fink, there was more to Monday's rally than the ETF rumor. He also suggested a flight to quality spurred by fears of further global unrest. Fink's appraisal for the situation was reinforced by a downturn in U.S. stocks in early trading on Tuesday, as rising bond yields once again weighed in on investor appetite for risk assets. So Bitcoin is also outperforming Ethereum. So Tuesday's digital asset report shows that Bitcoin is outperforming many major altcoins, including Ethereum. Ether has continued to underperform Bitcoin for a variety of reasons, including the recent release of the BitVM paper. So Bitcoin is outperforming Ether because we are in the process of a broader adoption of crypto among the general public. So it's quite logical that purchasing Bitcoin is usually a new investor's first move, just because it's the first cryptocurrency, the one that is supposed to be more stable, I guess. So the U-Holder analyst said that there are just a few investors who start from an alternative coins. I don't know necessarily if that's true. Personally, I know when I first got into cryptocurrency, my first crypto was Dogecoin. I know meme coins have introduced a lot of people to cryptocurrency, and I can imagine though that Bitcoin is right up there, probably number one. But definitely not everybody's first crypto, although, it's definitely the smart one to pick for a spot ETF approval. That's for darn sure. Because, the major players, they're going to want to hold a bit of Bitcoin, right? Yeah, so that's what I got for you in this video. I mean, that's just a dress rehearsal, obviously, to see what's going to happen when the Bitcoin ETF does get approved. Keep you guys updated. Thanks for tuning in, and I'll catch you guys in the next one.